Like the British invasion of the Rolling Stones and the Beatles in the 1960s, are UK oil and gas companies destined for the United States? We'll find out next on the Energy News Beat Stand Up. Stu?
Hey, Michael, that is an outstanding way to put that out there. The Beatles have invaded. Well, guess what? Large UK oil and gas company explores U.S. deals, the Wall Street Journal. This comes at a really wild time, Michael. The strategic pivot that underscores growing frustrations within the UK energy sector. Harbour Energy, the largest oil and gas producer in the North Sea, is actively scouting merger and acquisition opportunities across the U.S. This move comes as this company seeks to establish a scalable position in the world's biggest energy market. Michael, I call this survival of the fittest, and we kind of knew it was coming when you have the net zero policies of the British UK destroying North Sea production. Let's kind of go through a little bit of that here. Let me also share my screen, Michael, and go ahead and bring this story up here. I'm going to add that to the stage. And when you take a look at this story on energynewsbeat.co, it is got, I went in the whole history in here. The UK produces enough oil and gas to meet about half of its domestic needs going down. And when you take a look at the natural factors around this, policy, economic pressures, the UK windfall profit tax. Michael, do you like a windfall profit tax on everything you earn?
No, I don't.
And when you take a look at that, a number of companies that are leaving out here, a stark warning for net zero and deindustrialization. This is going to happen to other energy companies in the EU and the UK. The world is bifurcating into two camps. The first follows net zero, a fiscal financial pool of failure, or the second of solid energy policies based on no subsidies. And Michael, this is really heading home to the U.S. Just take a look at Saudi Arabia investing trillions.
Yeah, I think you point out this overview of North Sea production decline, and it really goes to something that we've also talked about, for the last couple of months on the podcast, of all of these oil and gas companies that are based in the UK thinking of being relisted in the United States. BP has talked about that now for 6 months now. They're not probably openly talking about it, but I guarantee their board is running a study on should we go relist in the United States for a variety of reasons. One, makes it easier to get acquired or sell and divest assets. Number two, we actually trade at a discount relative to our counterparties. And we can see that very clearly with how, BP and Shell are valued. So, I think Harbour Energy looking to try to get into the United States market is a halfway ground to joining the US markets. I think they just go ahead and say, okay, let's just go ahead and get into the market, the US market, which is one of the better markets in the area. So,
oh, you bet. Hey, let's go to the next story here. Russia points out the lack of investment is poised to cause an oil shortage. Michael, you got to love this story when you sit back and think that, wait a minute, Putin may be right again. What's up with this story? In a stark warning that echoes growing concerns around the global energy sector, Russia's top OPEC negotiator, Alexander Novak, was highlighted the imminent risk of an oil shortage driven by chronic underinvestment. You've talked about that a lot, Michael. Speaking recently, Novak emphasized that traditional accessible reserves are depleting rapidly. Michael, did you know that the oil that is being pumped around the world is about 80% in declining oil fields? And we have very few new oil fields around the world. It's a ticking, this is worse than Peter Pan's alligator walking around with a clock in his stomach. It's going to be a huge problem. And we take a look at long-term oil demand, no peak in sight. Whatever happened to peak oil?
Well, I think really what he's pointing out is something that's not necessarily unknown. I think everyone in the oil and gas business knows this. We live in a cyclical business that's driven by supply and demand. And when you don't, and when supply and demand become out of balance one way or the other, when you have more supply than demand, prices go down, which is what we're seeing right now. When demand then all of a sudden peaks and goes above supply, we see prices rise. What happens is you're always fighting the decline curve in oil and gas. Every single oil and gas well declines. Don't let anybody lie to you. I know in Landman, the guy does his nice napkin math on, 500 barrels a day times 365. We're going to make $10 million a year. Not quite how it works. You might make 500 barrels a day for a couple days, but it's not going to be 500 barrels a day flat. So point of the matter is we're always fighting the decline curve, which means new production has to come online to replace declining production. And if that doesn't happen because supply is greater than demand and the prices are low to the point where there's no incentive or no profitability in order to drill new wells, then you get this. And then you enter what's called, and that's where we move around the basically commodity cycle. So I don't think he's saying anything that's too crazy. I think he's right on the point. The question is, when will this oil shortage happen? In the next 2 years, 3 years, 4 years? Nobody knows that. I would wager to bet that it's probably farther away than it is super close. I tend to side a little bit with JP Morgan on the softness of the oil market in 2026 relative to where it could be in 2027, 2028. Obviously, if you're Russia, if you're a large oil and gas company, if you're OPEC, you have to plan 5-10 years in the future. Absolutely. Somebody like a small mid-independent, you have to live sort of in the here, now, and 6-month timeline, which there's a lot of softness. So it's a real balance here. And considering the fact that oil and gas production domestically here in the United States is driven by those small to medium independents, while he's right in the long term, I think in the short term, obviously in this business, we're going to definitely experience some softness.
Oh, you bet. Hey, let me roll to the next story here. China unveils new CO2 turbine that could upend power tech. This is a pretty cool. I think that eventually we will be using less and less oil and gas. But when you consider the molecules require feedstocks for plastics and everything else, eventually we'll not need them. This is a cool story. I like new tech. China unveils new CO2 turbine that could upend power tech in a groundbreaking development that could reshape the landscape of power generation. China has unveiled the first supercritical carbon dioxide and small s CO2 power generator. This innovative technology uses CO2 in a supercritical state, kind of like what my wife thinks of me, and working in fluid instead of traditional steam, promises higher efficiency, reduced environmental impact, and versatile applications across industries. I went ahead and also took a look at the different industries. Think about the CO2 output by, Michael, are you ready? Cement and steel. And you take a look at those two industries alone, cement and steel, this could really make a huge difference for turning a cement factory into a power generation and parking a data center right next to it.
No, very interesting. I think I think part of the reason why they're on the forefront of a lot of this stuff is because they think in these 5, 10, 20-year timeframes. I think they're setting themselves up to attempt to be the AI data center. And if you think about these critical carbon dioxide power generators, it's going to be incredible from both a power delivery standpoint, but then a power efficiency standpoint.
Oh, absolutely, Michael. And so let's take a look at the next story here. Can the U.S. make bigger reactors? I'll tell you what, the industry, I'm having a lot of fun talking to some folks that really know what they're doing, unlike me, since I went to Oklahoma State University. Let's take a look at this next story here. I actually feel sorry for Oklahoma State. They have actually fallen off the football team, but hey, at least Dallas has showed up to win once. Can the U.S. make big nuclear reactors? How can we make nuclear profitable? But Michael, we also have to ask, how do investors react? In an era when artificial intelligence, Michael, according to Oklahoma State University, that's AI, is reshaping industries. The U.S. government is stepping up to harness its full potential for scientific advancements, including the energy sector. When you take a look at the White House launched the Genesis mission, this almost sounds like a Star Trek episode, an executive order directing the Department of Energy to develop AI platform that integrates federal supercomputers and data assets to accelerate breakthroughs in areas of energy innovation. Michael, what we are going to see is large government loans for the big reactors in order to go through this entire process. Big capital money, private PE firms are not wanting to put money into nuclear. Why? Because you're 10 years away from getting a return. Getting low cost government loans is important. I put in here Constellation Energy, Vista Corp, Cameo Corp, GE Vernova, and NewScale Power as some to keep an eye on, but they also have cash flow coming in from other deals already in the pipe. The key to nuclear is having cash flow. And if you've got a low cost government loan, which is not a subsidy, the government will make money on it and we will get to the big nuclear. But again, you know that I'm such a big fan of nano nuclear energy because they've got plants they're building. They've got cash flow coming in off of their other stuff. They've got a different business model. So the big nuclear is going to have low cost things. Michael, I also put in here beyond the core operators, the nuclear supply chain could be some good investment because they're going to get their money up front while they build out the nuclear. Cash flow, says the OSU guy, is kind of important when you're paying your football players.
Just a little
Group,
bit.
BHP Group, global mining giant, uranium assets could be a good one. Next Gen Energy could be really cool. Uranium Energy Corp, Denison Mines, and Brookfield Renewable involved in nuclear financing and supply chain through partnerships. I'm going to be breaking all of these out in financial analysis and really kind of breaking those out later on. So the key, low cost loans.
No, absolutely. I'm completely with you. I think it's I'm completely with you on that standpoint. I think our good friend Todd Royal would have some interesting stuff to say about that. But again, just like we talked about with China going in on these CO2 turbines, if we're going to, as the United States, be the energy capital of the world for this new data center build out, natural gas, battery storage, nuclear has to be the core of the argument. Has to be the core.
You bet. I like it. And so with that, we got to pay our bills.
Yeah, let's jump over. We'll talk oil prices here in a second, but let's quickly jump over and pay the bills, guys. As always, thank you for checking us out on the world's greatest website, www.energynewsbeat.com. Stu does a great job making sure we stay up to speed with everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. Shout out to friends of the show, Reese Energy Consulting, for supporting the show, guys. If you are at all in the midstream, the NGL space, if you're an operator that isn't working and isn't getting your first purchaser statements audited, call up Reese Energy Consulting, guys. They have an incredible team started by a great friend of the show, Steve Reese, all the way down to their analysts who come and do and can really help with any project you have. Again, whether you're auditing your first purchaser statements, whether you're a midstream company looking to build out a new project, you need some red team analysis. The team at Reese Energy Consulting can handle yours. They have clients that range all up and down the value and size chain. So if you're three guys in a garage or you're a multinational midstream company, they have the services to fit you. Check them out, ReeseEnergyConsulting.com. And finally, guys, it's tax season. Check out investinOil.energynewsbeat.com if you want to invest in oil while saving a little bit on your taxes. And that's the key, guys. We don't give your money to Zorhan Mamdani. Give it to the wonderful people in the oil and gas space, guys. InvestinOil.energynewsbeat.com. But let's just jump to oil prices. It's we're recording this. This will come out on Thanksgiving. First off, happy Thanksgiving to everybody who's listened to us. We really appreciate your guys' support. And the one real reason we're able to do this is because of you guys. But I mean, looking at oil prices, we're at 58.03. I'm sort of holding with bated breath here, Stu, because every Thanksgiving we seem to have a crazy drop in oil prices. So yes, it's a time for Thanksgiving tomorrow, but hopefully we don't get cooked like the turkeys we're trying to roast tomorrow. So I'm sort of holding with bated breath. We don't see the EIA crude oil inventories. They'll come out tomorrow, or as you listen to this, on Thanksgiving. So, or I think they come out on Friday at least. So we'll cover that in the Monday show. Natural gas is trading all the way up at $4.61, which is absolutely incredible relative to I think what we're seeing on that side. S&P 500 is actually up about 3.7 of a percentage point today. I mean, just looking at that oil chart, Stu, it's been an absolute obliteration of prices since November. Woo!
My goodness. Yeah, the dichotomy between drill baby drill and all the oil guys standing out in the field getting laid off is a whole different animal.
It is. So it's we're going to be walking that balance anytime. But otherwise, it's really all quiet on the Western fronts, too. I haven't seen much. I mean, it's the Thanksgiving, M&A quiet down, earnings have quiet down. I think people, I'm getting a lot of out of office replies on emails I'm sending this morning. So we just hope everybody has a great Thanksgiving. We appreciate you guys checking us out here, checking out our new little format that we're playing around with. So everybody, thank you. Happy Thanksgiving from the Energy Newsbeat family, guys. But with that, we're going to go and let you go. Get out of here and enjoy your turkey day. Eat a bunch for us. Take a few naps. Go Broncos. They'll play on Sunday Night Football, so it'll be fun to see them, and we will make it happen, guys. For Stuart Turley, I'm Michael Tanner. Have a happy Thanksgiving, guys. We'll see you Monday.